Hey guys, Crypto here with a update on the crypto markets as a whole. It has been a while since I posted my last video update here on YouTube. So what I'm going to do is I'm going to go ahead and select a few of my video updates that I've shared on Twitter over the last year or so that I think are really important, really significant for the context of this video. I'm going to go ahead and play them here. Those of you who haven't been following me on Twitter, you've missed about a year of content, maybe 30 to 50 smaller, shorter video updates that I've made. So in order to get you guys up to speed, I'm going to select a few of those, 2 or 3 of those that I think are probably the most important for getting the big picture here. And I'm going to replay those here. We're going to address some key points to this thesis that I've had for a while now about a major fifth wave to 100K plus. From my last YouTube video that was shared about a year ago, we're going to talk about things that went wrong from that video, things that went right from that video, things that are going right now. I'm going to talk about a few significant things, which I'll share videos on this that I shared on Twitter in case you guys haven't seen them, but I'm going to talk about a few specifics. The first thing that I'm going to talk about is why I believe this was not our cycle top, why I'm still expecting a parabolic blow off top to 100K plus. The second thing that I'm going to discuss is why this level here, the 14K level, is such a significant invalidation point for this entire thesis that has been building since our lows at 3K in 2018. Back when I first said that I'm expecting a new all-time high for this cycle sometime in 2023 above 100K. This has always been the invalidation level for that idea. I'm going to talk about the structure here that I was expecting versus what we actually got, a much deeper correction than I was expecting back when I shared that video a year ago. I'm going to break this whole video down into sections so it's easy for you guys to navigate. I'm also going to talk about current price action that we've been seeing off of these lows. Again, I've been sharing updates on my Twitter, but I'm going to try and get you guys on YouTube up to speed and then continue regular updates on YouTube as well. So sit tight, guys. There's a lot of information here to digest. If you haven't been following me on Twitter, there's a lot more information for you to digest. If you have been following me on Twitter, feel free to skip around the video to the current updates if you'd like. I will say a few things though, guys. If you have not been keeping up to date with my analysis, I really recommend watching the entire video. I know it's going to be long, but I think you guys are going to learn a ton. I think you guys will enjoy it. I think it will make a lot of sense once you watch the videos. A lot of people are very quick to dismiss the ideas that I have without giving them a chance, without watching the logic and the rationale behind the thesis that I have. They simply dismiss it before they give it a chance. And honestly, that is the worst thing that you can do with anything. I'm very open to opinions that are against the beliefs that I hold or opinions that are counter to the arguments that I make, as long as the person who is giving them has considered what I'm saying. I will happily consider what they're saying. That's the best way to learn, is by listening to people with other opinions than yourself. But in order to do that, in order to gain from those conversations, you have to have an open mind and you have to consider both perspectives. So I'm happy to hear counter arguments to this perspective that I've been sharing for literally years. All I ask is that you understand where my thesis comes from, the logic and rationale behind it. And after that point, if you still disagree, that's totally fine. Happy to hear the other side of the argument. But guys, let's jump right into it. Again, I'm going to break this video down into sections to keep you guys up to date, make it easy to navigate, because this is going to be a long video. But again, I highly encourage you guys to watch through the entirety of this video. We've had many people watch it and then say, wow, this was incredible content. I've learned so much. Thank you for sharing. I think you guys will be happy if you haven't seen this content yet to watch it. So again, in this video, what I plan on discussing is I'm going to go back to the videos that I shared a year ago, talk about what went wrong in those videos, stuff that I was not expecting that did play out. I'm going to then share some some Twitter video clips that specifically talk about 2 major points of the bullish argument that I've had, specifically talk about why this was not the top of our cycle, and then again talk about why this level was so significant, why I was not expecting it to be tagged. It was not tagged, which keeps the entire bullish thesis intact. And then I'm going to talk about current expectations, or PA, and why I still think that we will be seeing new all-time highs above $70,000 this year. Okay, so keep up with me, guys. Let me know if you guys have any questions as well, and let's jump right into it. All right, guys, so some of you may remember the last couple of videos that I shared on my YouTube. We're going to talk about both of these last 2 videos. The first one was Bitcoin top in 6+ months, not in December. And this was back when most were expecting, back when we were trading at 60K plus, to then see a push to 100K plus. And I was pretty adamant that we're not going to see that push to 100K plus right then. Rather, we were headed back down to the 30 to 40K region and then would then continue up to 100K plus therefore putting our Bitcoin top not in December of that year, but rather 6+ months after. So we're going to play a short clip from that video to go back and take a look at exactly what was stated in this video, kind of summarize it all in a brief little clip here.
This major fourth wave, while I don't think it's complete, it can take many shapes and forms. The running flat is one that we've seen in prior history many times, and so I think it's quite likely that that is what we see. However, I want to be clear that it can again take many different forms. And you'll recall back in my original chart that I drew up with Bitcoin back when it was at $5,000 to $6,000, I had actually depicted that fourth wave as a triangle, and that's because triangles often occur as fourth waves. So back then I depicted it as a triangle. Over here I'm saying it's probably going to play out as a running flat now that we've seen more PA develop. But I would also like to be very clear, it could take various shapes and forms.
All right, guys, so as you saw in that video, the key point that I want to emphasize here is that I was expecting a running flat, okay? And I was expecting a running flat because in prior history of Bitcoin, we've seen these running flats play out many times as explained in that video. And I did specify, and I did this for a reason, that these corrective structures can take various shapes and forms. My expectation, the one that I had the most confidence in, was a running flat, but it's also possible that we see other forms of corrective structures here, as I mentioned in that video. So obviously we got the running flat down to this very significant level, and I think that we probably would have continued up from this level here if we had not seen the events that transpired over the last year or so, which we'll cover again later in this video. Next, we will talk about the last video that I shared on YouTube, which was shortly after this one here, and that was talking about a major breakout on the Ethereum-Bitcoin pairing and why I was expecting an alt season again. This was based on the premise that Bitcoin was going to find support in the 30 to 40K region and continue up from that level. We'll go ahead and take a look at a quick clip from that video there.
Push up here and then a rejection and then a move back down. Something like that is also possible. In other words, I don't think that the down leg of this flat correction is quite yet complete, and maybe we're still working on the B leg up. Again, if this is a flat, you have an A, a B, and a C, right? So maybe we're still working on this larger B leg, and so maybe we do put in a higher high and then come down for the C, or maybe we're already working on the C, we're going to put in a lower high and come.
That was the last two videos covered in my YouTube, and obviously I was wrong about this being our local bottom. I do think that if the events that transpired over the last year or so did not take place, that this probably would not have happened, but they did. I do believe that we would have held had those events not occurred. That being said, as I've stated for a long time, and those of you who are familiar with the analysis that I share, the invalidation level of this entire thesis is back here at 14K. Okay, and I've shared this as well. I've tweeted about it hundreds of times on my Twitter. I was not expecting a retest of even 20K. This type of a retest I was not expecting. We got that. Regardless of that retest, the invalidation for the higher time frame thesis was 14K. And people are like, well, credible, you said the invalidation was 30K. And I'll say again, the invalidation for this particular corrective structure, 30K. The running flat, by definition, we should not go below this level for a running flat to be for a correction to be called a running flat. As I explained in my last YouTube video, shared over a year ago, this correction could take various shapes and forms. And because of the events that transpired, the running flat extended to the downside, and this is no longer running flat. So yes, the running flat idea was invalidated at 30K. The higher time frame thesis has not been invalidated and would only have been invalidated on a move down to 14K, as I stated on my Twitter. And again, the logic behind that is something that I'm going to be sharing in one of these in this YouTube video coming forward. So we're going to discuss about why this 14K level is so significant. Again, I shared a video on Twitter about this, but for those of you who have missed it, I'll be playing it here shortly. With that being said, we've now covered the past videos about what I was expecting and what went wrong. And for those who are unaware, which I feel like most of you are probably very much aware of what happened here, but we had two major events that occurred on this timeline that kind of changed the perspectives here, right? That kind of changed the price action that was developing here. And we'll talk about some of the events that transpired that led to what I believe a break of these 30K lows. And I've shared this on Twitter as well. But what I want to focus on is these two events that occurred here. One was the Luna 3AC collapse. And again, for those of you unfamiliar, the gist of it is that 3AC, one of the largest venture capital firms in the entire space, also was at that time very reputable, had basically gotten a lot of loans from various organizations in the crypto space. Some of you may be familiar with Celsius, with BlockFi, with pretty much every major name, 3AC, this venture capital fund, had gotten loans from all of these guys with low collateral, which was the fault of the lenders. They should have had more collateral on board, but basically took loans from all of these guys and invested most of that money, a big chunk of it, I should say, into Luna. For those again unfamiliar, Luna at the time was one of the top 5 coins in the space, had hit top 5 by market cap, and saw an insane collapse overnight, lost 90+% of its value, and literally went to zero. And so all that money that 3AC had invested in Luna had now vanished. That money was not theirs. It was money that they had borrowed from these other organizations. And that caused a collapse, a massive collapse, a mass panic sell, liquidations of various assets held by these other creditors to try and stay afloat. And now most of them are bankrupt. BlockFi, I don't want to misspeak here, but Celsius definitely bankrupt, Voyager bankrupt. A number of crypto firms then collapsed along with 3AC, along with Luna. FTX, of course, collapsed as well. And we found out about FTX over here where they stopped withdrawals for customers, and that gave us the final wave of panic selling. But in any case, guys, the point that I want to make here is that there was some major events that I think caused more panic and more selling than I normally would have expected, caused a break of this level and turned what would have been a running flat into a different corrective structure and expanded flat. Okay, not what I was expecting, but it is what happened. Now, many people again say, well, we broke this level here. How can we still be looking for a final fifth wave? Again, my thesis, even back when we were trading at 65K, was that we're going to get a move down to 30 to 40K. And from there, we get our final fifth wave to the upside, right? Obviously, the events that transpired led to much more panic selling, much more of a deeper drop, but it hasn't changed the high time frame thesis, which is that we're still missing a final fifth wave. All it did was extend the duration of this corrective major wave 4, make it longer, make it deeper, but it didn't invalidate bullish structure. And we are still waiting for that impulsive fifth wave, which I think we're going to be getting, which I think has already started, but that I think we'll be completing this year. All right, guys. So now for the 2 videos that I want to share with you from Twitter that I said I would, regarding the probably the 2 most important videos that I've shared since the last year, over the last year. The first one, I'm going to specifically talk about why this particular move to the upside was not the final fifth. We got our first, our third. We were looking for one more major wave. I'm going to talk about why this fifth wave to the upside was not. That's one of the biggest points in contention about this theory. Many people argue that, hey, this was our fifth wave. So this next video breaks down exactly why this is not a valid fifth wave, why it's not an impulsive move, and why we are still expecting a major fifth wave. The other thing I want to talk about is, why is this level so important? Why is this invalidation level? Again, people are like, well, how can you say that bullish market structure isn't broken? We broke it on the break of 30K. And I've explained that in another Twitter video, which again, some of you may have seen, a lot of you have not. And so I'm going to go ahead and play that clip here again. Very important. If you want to keep up with my argument and you want to keep up with the thesis here and you want to give it a chance, you don't just want to throw it away and close your mind off to the possibilities, give it a chance. Watch the video, understand why this level was a level of invalidation, why this was not the level of invalidation for the higher time frame thesis. And I promise you guys, it'll be worth your time, and I think you'll learn a lot. And if you still don't agree with me after, again, that's totally fine. But please go ahead and watch this video if you haven't seen it already, and then we'll continue on from there. Guys, Scribble Crypto here with a video update to talk about LE Wave and market structure. Okay, the issue with LE Wave is that the nomenclature used when discussing it sounds a bit confusing, and because of this, people don't quite understand it. They think it's magic lines. They make fun of it, when in reality, all it is, it's a way to discuss market structure. Okay, at the end of the day, if you're talking about market structure, then when I'm talking about LE Wave, I'm talking about the same exact thing. I'm just talking about it using different nomenclature, because LE Wave kind of incorporates degrees of market structure. For example, you could have an uptrend on the 1 hourly time frame, but you may have a downtrend on the daily. You may have an uptrend on the daily, but a downtrend on the monthly, et cetera, et cetera. It's important to be able to distinguish time frames when you're talking about market trends so that you don't get caught off sides with a larger trend in mind. So with that being said, let's take a quick look. Let's go to Google and type in what is an uptrend. Now on Google, when you type in what is an uptrend, here is a picture of an uptrend. And everyone that you talk to will agree that this is your basic uptrend. This is off of baby pips, all right? The most simple way of talking about market direction and market trends is whether the market is uptrending or downtrending, okay? Now again, you could have a market that uptrends on the lower time frames, or I should say you could have a market that's downtrending on the lower time frames, like in these situations right here, but is in a larger time frame uptrend, okay? So you need to think about uptrends and downtrends with respect to time frame. And LE Wave is a way to kind of process all of that together, to know that if a downtrend is occurring, what time frame is it? Is it a downtrend within a larger uptrend, or is it a more significant downtrend? And Elliott helps differentiate uptrends and downtrends of various degrees or various time frames. So let's go ahead and take this. I'm going to copy this image, and let's go ahead and paste it here. Okay, this is an uptrend. Okay, and what we have here is a move off the low to the first high. The move that follows that, as long as it goes above this low, is considered a higher low, okay? Then we have a break of these highs, and at that point you have a higher high. The move that follows after that makes a higher low, and then a high follows. That is the definition of an uptrend, okay? Now if we go ahead and apply that to our structure right here, we have a major low, okay? That was our low at 3K. We have an impulsive structure, and what an impulsive structure simply means is it's a structure that has momentum behind it, okay? Momentum behind it that moves in a trending direction, okay? And within this move from this low to this high, we have a smaller uptrend on a lower time frame that can be visible by the subdivisions of this move up, okay? That is the first leg of our uptrend. Then we have this very vicious drop down. Many of you may remember it. Some of you may not have been there, but this was our correction in March, okay? It was a violent correction. We dropped some, I think it was about 70% off the highs, off our local high, okay? So this was here at 14,166. We hit a low of 3,000 and some change, okay? And those of you who've been following me for a while remember that back during this time, I talked about how invalidation of the uptrend, the larger uptrend, was a break below this low at 3K. As long as the lows over here are not met, this, doesn't matter how deep it is a higher low, okay? So we made that higher low, and that's why I was incredibly bullish here in the low 3 to 6K region, and this is when I actually made my 2-year plan to 100K plus. Some of you may remember that chart. But this is essentially why I was so bullish and loading up on Bitcoin under 10K, because we had an impulse, we had a correction, and what we'd expect after that is a new impulse, new all-time highs, above 14K, and then above 20K. And so what followed this 70% drawdown was a rapid move back to the upside, and the new high of $65,000. We went something like 20x off of these lows, okay? And structure remained intact. It was a big dip. It was a 70+% correction, okay? But it was followed by an even stronger move to the upside that made this one look like peanuts, okay? And again, just as before, people getting pissed off at me for saying that the larger bull cycle is not over. Cred, how can you be bearish at 3 to 4K? We just saw 70% drawdown. We're not going back to new ultimate highs for 3+ years. Crypto is cooked. We're going down to sub 3K. I have heard it all before. But the bottom line is that this was a higher low on this larger time frame. An impulse, corrective structure, higher low. Another impulse, okay? So this third leg is akin to this third leg right here, okay? Once again, we have a higher high because we broke these highs, higher high, okay? And now we're looking for a higher low to be put in, okay? After the higher low, we get the final fifth wave impulse, which is the wave that I've been talking about to 100K plus. Okay, some of you will recall that, again, once you were here at 60, 65K, I was bearish here and I was looking for a move down to 30 to 40K, move down to this region, okay? And we got to move down to that region. Then we bounced a little and we broke down even further. I was not expecting these lows to be breached. They were breached, okay? But again, once again, just like we saw here at 3K, we had a nice move down, we had a nice rally, and then we broke down even further. This is where I believe, right here, our larger impulsive move started. This impulsive move started, okay? Now, some can say that the impulse started from here. I think it started from here. It doesn't really make that big of a difference, but we can say that the impulse started somewhere at these levels, okay? So yeah, I get this was a violent correction, just as this was a violent correction, but percentage-wise, off of these highs and based off the lows here, this is no deeper than this correction here, okay? So to say that, oh, well, this broke structure because it's a deep correction makes no sense, because this was a very deep correction that didn't break structure. What is a break of structure on this chart, okay? We make this move up. What is a break of structure? You can ask anyone. Everyone will tell you that the structure has not been broken on this time frame of this degree until we move below this low. As long as this low right here makes a higher low above this low, this is a higher low. We could even go down to here and then go up. And you can ask anyone, is this broken structure? They're going to tell you no, structure is intact because these lows have not been breached. Yet when we talk about this structure, everyone's like, nah, lows are breached, game over. They're ignoring the fact that this move, I get it, it's a deep retracement, okay? But this move started way down here at like 9 to 10K, or some may argue 3K. So while this is a deep retracement, this major leg started down here. So to say that a move that's of this depth invalidates the structure ignores the basics of a larger, higher time frame impulse or higher time frame uptrend, okay? Now, the argument that people are making is that, well, this was the third leg. This little move here was this fourth leg, the higher low. They're saying this was the higher low, okay? And this leg was this fifth leg, and then we broke this, and that's why structure is broken. They're saying that this 5-wave move is complete. That's the argument. The 5 waves have completed here at 69K. Therefore, we've now started a correction of this entire leg off at 3K, and so a break of this low confirmed it. Therefore, we're in a much larger bear market, and it's going to take 3 years to make new all-time highs, okay? I will tell you one thing. If they are correct, okay, if they are correct, and this top that we're seeing here is the same top that we saw here, and the same top that we saw here, and by that I mean of the same magnitude, okay, then this bear market that we're in should be of the same magnitude as the prior 2 bear markets after these major tops, okay? And what I mean by that is, if you look at in terms of time and price, like how do you know if a correction is of a larger degree or a smaller degree? How do you know these things, okay? You have to compare time and price. 2 things that we look for. The correction that follows the top. In terms of depth, is it as deep as these prior corrections, right? So like a correction of this degree, this one went down some like 80 to 90%. This one went down like 80 to 90%, I think, or like 70 to 80%. So the first criteria is, do the corrections hit that depth of retracement, right? So off the highs, do we drop 70 to 80% is the first thing you're looking for, okay? Same thing here. Off the highs, we drop 70 to 80%. Notice that this correction made a 70, 80% drop, right? The second criteria, though, is how long does it take to get back to the prior highs of where the drop started, right? So in this case, we dropped at 2017. It took, to get back to this high, it took about 3 years, okay? Same with this one. We topped here. To get back to those highs took about 3 to 4 years, okay? This drop, we dropped and we got back above the highs in a matter of a year and a half, a year? What is this? June, July, August, a little over a year, okay? So this correction lasted for it took about a year to get back to the prior highs. These corrections took about 3 years to get back to the prior highs. So this correction is not of the same magnitude as this correction or this correction. I think most can agree that this correction was not as significant as a correction from our high. No one's arguing that this was our bull market top and that this correction was the same as the 2017 correction or the 2013 correction, right? No one's making that argument. And they're not making that argument now because what followed was a massive impulse that broke the all-time highs again, and we recovered very quickly. That's why no one's making that argument. Down here, they were making that argument. Shortly after we ramped up and went 20x, they said, okay, never mind. We were probably wrong about that. This correction was not the same as this or the same as this because we recovered so quickly from it, right? Now, in the same regard, if you're going to argue that our high of this cycle was at 65K, then you better expect that we're not going to make a new high for 3 to 4 years, right? If this top was the same as this top or the same as this top, then the correction, right, in terms of price and time, the 2 things that we look for to see if this is of the same degree or same magnitude, should be similar, right? If this was our top, then we should drop, number 1, we should drop 70, 80%, okay? And number 2, we should take about 3 years to get back to these highs. So if this was 2021 that we started this November, so almost 2022, we shouldn't expect new highs till 2024, 2025, okay? And I've seen that argument out there, and that's fine. That's the right way of thinking if you believe this was a major cycle top as 2017 was, as 2013 was. So anyone who's saying 2024, 2025 for a new all-time high, I get where they're coming from, and I understand it, okay? Fine. If that happens, they're right. If we take till 2024, 2025 to get a new all-time high, then this correction is of a much more larger degree, okay? But if we see a new all-time high in 2023, okay, if we recover from this correction in what's likely going to be about a year to a year and a half, that further validates that this drop, as violent as it was, is the same in magnitude as this drop because price-wise, it's about the same. It's actually a little bit less in terms of percentage-wise. And time-wise, it's about the same, a year to a year and a half to recover from this drop, right? So if we make new all-time highs in 2023, that validates, that proves that this correction, while deep, was of the same magnitude as this one right here and was not the same as our 2017 correction or our 2013 correction, and that one is yet to come. And that's the whole argument that I've been making, is that we have what I believe to be a low, okay, a high, which is this high right here, a higher low, which is this one right here, a higher high, which is this point right here, and a higher low, which is this point right here, and we're still yet to make our high for this cycle, okay? We're still yet to make our high, this final wave, the 5th wave as we call it, wave 1, wave 3, wave 5, the 5th wave to the upside, okay? And that's, I think, is going to hit over 100K. So this is market structure, okay? Everyone agrees this is an uptrend. When you talk about it in Elliott wave terms, a 1, 2, 3, 4, 5, all of a sudden it's bollocks. All of a sudden, oh, that's bullshit, right? It's the same as this, guys. We're just calling a different name to talk about degrees of structure, right? So again, you look at this from a purely market structure standpoint of the highest degree, and it's like, okay, high, low, higher, low hasn't been broken. If you want to argue that this was a higher low and this was the top, sure, you can argue that it's been broken, but it's hard for me to like to understand why people have such a problem with the depth of this retracement when we saw a similar retracement here and went 20x. Like, you're arguing that because we dropped 60%, oh, it's over, right? This is 2017. We dropped 70% here and rallied 20x. So that argument, just because, if you're simply arguing on the basis of the depth of the correction, makes no sense to me. Crypto is volatile. Welcome to crypto. Like, we're going to see big drops. That doesn't mean that we're going to see breaks in market structure. When you see a rise from 3,000 to 60, when you see a 2,000% rise, you're going to get a 50 to 60% correction, and it's okay. It's not the end of the world, right? Like, that's what you have to understand, that crypto is naturally volatile, and you're going to get major swings to the upside and downside. But what's important is market structure and a break-of structure. Now, why do I think that this isn't the higher low and that this isn't the higher high? Again, this comes into the idea of trending markets and what we should expect to see behind these trends, and again, time and price, right? So the argument here is that this is our fourth wave and this is our fifth, okay? The fourth wave should relate to the second wave here in terms of, again, time and price if they're of the same degree, okay? The second wave, depending on whether you consider this the bottom or this the bottom, and again, I consider this the bottom, but by that I mean I consider the impulse our third wave to have started here. I've talked more about how corrections don't have to bottom at the absolute macro bottom. They could bottom basically when the next impulse starts, which is the next aggressively impulsive movement where volume picks up and we see momentum behind the move. And less choppy price action, right? And that's what caught a lot of people off guard here, was very choppy price action. They said it's not impulsive, and then we impulsed midway through. But anyways, if we take our wave 2 correction as being from this is the start of it, and this is the end of it, that was a period of June 2019 to August 2020, June, July, August. We're looking at about a year and 2 months, okay? By that logic, the fourth wave should relate to that, okay? It doesn't mean it has to be a year and 2 months, okay? That just means it should be within like 2 to 3 multiples of this correction, right? Those arguing that their fourth wave was this right here are arguing that it took 2 months to make a fourth wave. This one took a year and 2 months, and this one took 2 months, a sixth of the size. That is not correct in terms of degree, right? In terms of magnitude. Yeah, we got a pretty deep correction. It went from 60K to 30K, 50% drop. This was a 70% drop. So I'd say that's okay in terms of price relationship, but in terms of time relationship, it's not. Okay, in terms of time relationship, a 2-month correction is probably of a smaller degree than one that took a year and 2 months. Okay, if you were to take this correction from here to here, now we're looking at June 19 to March 20. June, July, August, September, October, December, January, February, March. You're looking at 9 months. Okay, right? Is that right? 9 months? March, April, May, June. Yeah, 9 months. Okay. Even then, 2 months versus 9 is still 1 to 4 in terms of time. Even if you ignore, you consider this like it took longer to recover because of the black swan, which was COVID. Even if you ignore this time and you consider this the bottom, that's still 4 times as long as this move here. Proportionally, it's not right, okay? Now you take this correction of a year and 2 months and compare it to this structure, which again, I think is a larger corrective structure like this, expanded flat, okay? You compare those, and now we have a correction that went from April 2021 to what we're at here at June 2022, April, May, June. That's about a year and 2 months. A perfect one-to-one relationship with the length of this structure in terms of time, okay? And if you compare it to this, 9 months versus a year and 2 months, about 1 to 1.5, okay? Still not 1 to 4, which is way off in terms of time, or 1 to 6 even, right? 1 to 6 here. So from a price perspective, both of these dips make sense. But from a time perspective, this does not make sense as the wave 4 of this structure. It makes sense as a smaller correction or as part of a larger wave 4, okay? That's the first argument, that time-wise, this is the major wave 2 and this is the major wave 4 makes a lot more sense than this is the major wave 2 and this little thing is the major wave 4, okay? Now the second thing that we look for is impulsive movements, right? We recognize that this is impulsive because of the way it looks. And you can look at this move here and it's like a baby version of this move here because this was a giant impulsive structure. This move here, again, another version of this move here and this move here, just the way that they look, that is smaller movements, okay? Aggressive movements to the upside, up, sideways, up, sideways, up, sideways, up, sideways, up, sideways, up, sideways, right? Up, sideways, up, sideways, up, sideways, up, sideways. Okay, same thing here. In a parabolic fashion, that is what an impulse looks like, okay? An impulse has momentum behind it, and typically it's a 5-legged structure. And where does that come from? Comes from here, a 5-legged structure, okay? This isn't some magic shit. This is just high, higher, low, higher, high, higher, low, high, high. That's an impulse. 5 legs, 5 waves, okay? But if I say this is an impulse, an Elliott wave impulse, people laugh. If I say it's an uptrend, oh, yep, 100% uptrend, okay? That's the issue with Elliott wave that we keep coming across. People don't really understand it and they make fun of it. It's the same thing. So anyways, going back to this here, okay, what we're looking for is a clear impulse here with a nice 5-wave subdivision, which I've talked about in prior videos. I'm not going to go into too much depth. A clear impulse here with a nice 5-wave subdivision. Again, I'm not going to go into too much depth. I've talked about it in the past. What do we have here? 1, 2, 3. That's not 5 waves, okay? You can argue it might be, and maybe it could be, but you have to force it, right? You have potentially a wave 1 here. You have a wave 2 correction. That's fine. Let me go ahead and clean this up a little bit. Okay, so you have a wave 1. You have a wave 2. You have a wave 3. And the argument is that this is the wave 4, and that this little thing, this little pop right here, is the 5th wave. Again, time and price, that makes no sense compared to the wave 3 and no sense compared to the wave 1. You're telling me that the 5th wave, this little move, right, was like 1/6 in terms of price of the third, 1/6 in terms of price of the first. What is this in terms of time? Like 1/6 in terms of time, 1/6 in terms of time. And so this is a clearly, in my opinion, a 3-legged structure. It does not have the same momentum as an impulse that we've seen time and time again during impulses. It simply doesn't. We pushed up, we kind of came down, we pushed up again, then we completely collapsed. This to me is more like a giant range, right? A ranging type of structure. And I think most will agree that this is a ranging type of structure. This is not impulsive. This is part of a larger ranging structure, which is, again, a larger 4th wave correction that's correcting this large 3rd wave, or this large 3rd wave, if you want to call the 3rd wave, starting from this low or this low. But to call a ranging structure an impulse, in my opinion, is forcing it, okay? And so where are invalidation points? And again, this is going to come back down to the simple idea of wave structure in a larger uptrend, okay? We've talked about time and price now. We've made that very clear. What invalidates this structure? What invalidates this structure, right? At what point does this structure, this leg, get invalidated? At what point does this higher low not become a higher low? Assuming that this is part of this ranging correction, which is this leg right here, how low can we go before this structure gets invalidated? Well, technically, one could argue the low's here at 4,000, right? That's the low of this wave here. Now, in Elliott wave, there's one more rule, aside from what we just showed here about these breaks. The rule is that the larger 4th wave, or this higher low, should not enter wave 1 territory, this higher high, okay? It should not enter the territory of this 1st wave. The logic behind that, this is 16K, sorry. Our wave 1 ended here, okay? So there. The logic behind having space between the higher low and the higher high in an impulsive structure is that in an impulsive structure, there's momentum behind each of these big legs. There's a lot of momentum behind it, okay? And because the markets are bullish, price moves up really aggressively. So when price corrects, and if the markets are still bullish, then you wouldn't expect price to make it all the way back down to this level here. The logic behind that, okay? So based on that logic, this move is typically the strongest. It's very aggressive, and it was, right? And based on that logic, we shouldn't expect this correction to tap into this level. If that happens, then it's more likely, okay? Then it's more likely that we're breaking down in a larger bear market. And that's the logic behind wave 4 should not enter wave 1 territory. And that's the first invalidation point to a larger uptrend structure like this. The first invalidation is if this correction ends up going so low that it hits these levels. It retraces so much of this move up that you have to question whether the market is still bullish. That is why this is an invalidation level 14K. Okay, the next invalidation level is a move below the low. That officially breaks a higher low, and by that time it's very obvious, right? But the first invalidation point is 14K in terms of depth of retracement. The second one is a breakdown below the lows of the 3rd wave, which again I think is, I'm making the argument it's here at 9K, but some will make the argument here it's 3K. It doesn't really matter, right? But that is where we get the invalidation points, okay? So people are like, oh, you're freaking crazy. You're bullish at 20K. You're saying the bull cycle hasn't ended. You're crazy. And again, the same people said that to me here at 3K. And all I can tell them is, I don't know what to tell you. We had a massive impulse off of 9K, or some can argue off of 3K. Yeah, we've had a deep retracement, but we're still above those levels. So as it stands, this is a higher low on the higher time frame structure. It's a higher low. I don't know what to tell you. It's a deep retracement. Crypto is volatile. We get deep retracements. I'm not going to invalidate my bias because we had a deep retracement when structure is intact, right? So this is the issue with market structure and Elliott. Elliott wave is a study of this right here, uptrends and downtrends on various degrees, right? That's all it is. But people get confused with the nomenclature, with the structures of the labels, and then they make fun of it because they don't understand it. They don't want to take the time to understand it, right? So again, what we're looking for here for confirmation, I've talked about this in other videos, is a break back above 23K. We hit 28, 29K, and at that point, I think we're probably starting our major fifth wave. I'll talk more about this in a much longer video. I wanted to talk about this whole Elliott wave thing in that video because I wanted that video to be like complete with everything, the whole argument all in one. But that's going to take some time to make. It's going to be a long video. So I thought I'd put this out today to kind of make it very clear why these levels are where they are. And let me add something else here, right? So people are like, Fred, you've been bullish the entire way down, the whole way, right? They're forgetting that I was bearish at 65K and I was looking for a drop to 30 to 40K. That we broke below, and I've admitted that I was wrong about that. I'm not going to pretend like I was right. We lost 30K. I wasn't expecting 30K to be lost. Was wrong about that. But and going way back, the high time frame validation of the structure is always in 13.8K, 14K, and the lower time frame invalidation of this lower time frame running flat structure was this low here, right? What that means is like this correction that we have here can take a bunch of different shapes and forms, right? It doesn't have to be a move down, a move higher, and then a move down even lower, okay? It could also be something like this, okay? And we've seen that, and I've talked about that in prior videos. That's considered running flat. It could be something like this, which is what I think we have now, an expanded flat or a larger complex structure. It could be something like this, which is a triangular structure, right? Before we continue up, there's various shapes and forms that this can take. And my bet was that it was going to be something like this because we've seen it so many times in the past, right? And so that got invalidated when we lost this level. And the people were like, and then we're invalid, but now higher time frame invalidation is at 14K. And oh, Craig, you're moving the goalpost. You're constantly lowering your targets so that you're never wrong. And no, if you've been following me and you've been paying attention, you know that I've said that the invalidation for the running flat is this, a break of 30K here. Okay, the higher time frame structure stays intact until the hit of 14K, because then we enter with material, and for the reasons that I described above, at that point, the larger structure is likely invalid. And I have no problem admitting if we hit there that I was wrong, right? And I was wrong about this being a running flat. It's become a larger expanded structure. And that could be attributed to 3AC, Luna, whatever you want to attribute it to, okay? Maybe if those things didn't happen and we didn't get this contagion in the markets, maybe we wouldn't have broken down, okay? And I don't know whether that is the case or that is not. All I know is that I was wrong about the running flat for whatever reasons, okay? And I'm not going to make excuses for that. But I'm saying that the higher structure remains intact until these levels are hit. And that's all I'm saying, right? So this is the logic behind these invalidation targets, the logic behind everything that I've been talking about. And if you have a logical or rational explanation as to why this may be incorrect, I'm open to listening to it. For this video, guys, again, longer update coming on YouTube down the road. All right, guys, so that was the video that I shared on Twitter some months ago. I hope you guys enjoyed it. I hope it all made sense. There have been a number of videos just like that one that I have been sharing on my Twitter that I haven't shared on YouTube yet. And it's just so much content, and I had to pick and choose what to show you guys because it would take way too long to upload all that content back onto YouTube. But I hope that made sense. If you guys have any other questions regarding that particular content, I have probably covered it somewhere on Twitter again, but let me know if you guys have any follow-up questions, and if there's enough of the same question, then I may search out that content and share that as well, or share the links to that content as well. But that pretty much covers what I wanted you guys to get caught up to speed with. And of course, as you probably saw in that video, when I made one of those last videos that I just shared, we were down trading around 18 to 20K. And at that time, still very, very bullish, still not expecting 14K to be tapped. We did see a drop with the FTX collapse right around here, down to about 15.5K. Invalidation still wasn't hit, and have been extremely bullish since. We're now trading at around $30,000, and I do think we're headed much higher this year. I've also made a video that actually talked about the angle of ascension on these moves, and basically the idea was that in these impulsive waves, the angle of ascent just gets steeper and steeper and steeper. In other words, the type of price action that we've seen thus far is nothing. It's just the bridge. It's just the start. And the move to the upside to get only more aggressive as time goes on. And so this type of an ascent was probably the most shallow ascent that we're going to see in the coming months. So if I'm right, within the next 6 months or so, we will have made a new all-time high on Bitcoin. And what happens after that is going to be very interesting. Again, I've made a video on it already. I mentioned on Twitter that I have made a video that talks about what happens after we hit these highs here. And if we make a new all-time high on Bitcoin this year, again, most are expecting that all-time high to occur in 2024, 2025. But I've stuck to this thesis, and I have no reason to change that expectation for a new all-time high here in 2023 for the end of our fifth wave and the end of this 5-year cycle in 2023. What happens after that? You've seen me very, very bullish over the last few years. You will soon see me very bearish if we do get this final blow off top and fifth wave to the upside. And that video, I have recorded about 3 months ago. And if you want to see that video, please like, comment, and share this one. Let me know that that's what interests you. And I'll upload that one. I was planning on uploading it a little bit later, but I was getting some good feedback on Twitter. People wanted to see it now. The sooner the better. So I'll talk about that. In that video, I talked about the 10 to 14K level that everyone was watching right now, the 10 to 14K level that everyone wanted to get hit on this drop down that I said wasn't likely to get hit on this drop down. I talk about that level in this next video. I talk about how deep I expect this correction to be. I talk about how long I expect it to take. I talk about comparisons with traditional markets. It's a really nice video, I think, of course. You guys tell me when you see it. But if you guys have enjoyed that, then let me know. And now we're going to go on to the part that I think a lot of you are probably looking for as well. Today's price action, what we're seeing here in the lower time frames. A few days ago on my Twitter, I posted an update. I said that within the next 48 hours, we will have a lot more clarity on what this recent move to the upside means, whether it is a breakout to the upside that could lead to our next mega pump, or whether it is just a retest of this resistance before a little bit of a dip again to 23 to 25K before we break out. Either way, extremely bullish here. I don't think that any dips that we see are going to be very significant. I've talked about that in recent videos on Twitter, but again, now let's jump into today's price action in the lower time frames. Let's zoom in on this area right here and take a look at what we have today. Hey guys, Critical Crypto here with a market update on Bitcoin. This is, of course, the lower time frame update, following up from my update that I shared about 2 or 3 days ago. In that update, just a very brief recap on what I talked about in that update. We had a very nice move right into this area of resistance. How can we identify that? Well, if we look historically, this is a very significant level that was previously acting as support after our push in all-time highs, and acted as support a couple of times, and then we broke down from it. And from this level is where we saw a major expansion of the downside. Therefore, this level is now significant and would be expected to typically act as resistance on the way up. However, I will add that we've seen situations in the past, such as our 6K level here back in 2018. Some of you may remember when we were discussing Bitcoin here at 3K. It seems like ages ago, but it was just a few years ago. Anyways, in that case, we had a major breakdown, and as we began rallying for our first impulsive move off of our lows, the first impulsive move of this, what is now going to be a 5-year bullish cycle, you can see that we ripped through this area of resistance after consolidating below it for a little bit. It didn't really offer much resistance, and so that is certainly a possibility in what we're seeing today, and I think we're going to get again, one of two possibilities that I talked about in my last video, but number one, either a shallow pullback down to potentially, 25K is the first area of interest, below that 23K. Those levels, a retest of those levels, totally fine. Or simply a consolidation here and continuation of the upside without a pullback to that 25K level. I will add that at this stage, based on the close that we're seeing today, I don't think 23K is happening. Again, in my last video update that I shared a few days ago, I was talking about this level here. On the 3-day chart, what we were looking at was potential bearish divergences that were forming here. And back when we were sitting here at around 23 to 25K, on this push to the upside, I pointed out these bearish divergences, and this is exactly why I was saying we need to be cautious at this level and a pullback to the green region, which was the buy zone for a move to 30K plus, as some of you may remember. That is what I was expecting because I could see momentum was slowing here. Lo and behold, we did get that pullback off of this bearish divergence. Again, a bearish divergence is just price making a higher high and RSI making a lower high in overbought territory, and that just indicates RSI is a measure of momentum, so this indicates momentum slowing down as price is moving up, and that sometimes indicates we're seeing a local top. So that is exactly what we saw, a push down. As we came back up off of that bounce off the very, very significant buy zone, we then had another local top forming here into resistance, right? And this is, again, a very significant level of resistance in prior history. It may not be that significant now, but it is an area of interest on the upside that may offer potential pullbacks. And we can further isolate it using this 3-day candle, or you can take a weekly candle as well. In any case, it's this specific area of resistance. So as we're pushing back up to this resistance, I mentioned on Twitter that, hey, I think we're headed to new all-time highs within 6 months. I'm very, very, very bullish. But at the same time, shallow pullbacks may occur on the way up. They will occur on the way up, not necessarily deep pullbacks, but shallow pullbacks. And if we are to get one, this is the perfect place to get one because it's the first logical area of resistance since our major area of support at around 19 to 20K. So watching this level, we could see price was making incremental higher highs, but RSI was failing to make higher highs. And this is why I was saying we need to be a little bit cautious here. And I said that this was about a few days ago, so probably at this candle here, on the next 3-day close, actually, sorry, it was this candle we were working on, right? So I said on the next 3-day close, if price wicks above these local highs, closes below, makes a local higher high, but RSI makes a lower high, then we're probably in danger of dumping down to those 23 to 25K levels. On the other hand, I said that if price does not wick above these levels and close below, and instead makes a strong candle close into this resistance region here, and RSI makes a higher high, we've officially invalidated that potential bearish divergence here on the 3-day. And that is exactly what we've done with today's close. The 3-day candle has closed, price has made a higher high, RSI has made a higher high, thus invalidating any potential bearish divergences that we had here on the 3-day. I'd like to also show you guys that on the weekly, there are no bearish divergences. So really our concern was the 3-day candle close. We've seen a very strong 3-day candle close, which means that the likelihood of us seeing a dump back to 23K at this point is a lot less, okay? Again, nothing is guaranteed in these markets, so I'm not going to say it's impossible, but I'm a lot more convinced in a simple rip through this level than I was before. Before, I was more leaning towards a pullback to 23 to 25K because of the slowdown of momentum that we were seeing, but with the most recent candle closure, I'm more confident in a move, or I should say continuation to the upside, okay? We're going to take a quick look now at the lower time frames. Now that we've established we had a very strong 3-day close, we'll mark off some key levels and we'll take it from there. All right, guys, so this is the lower time frame, and I'm just going to mark off some key levels here that are important, and then we'll take it from there. So we obviously have this consolidation structure that we formed here, and we can mark off the local highs and lows of this consolidation range. And so typically what we're looking for is a break above the range, and if we're really bullish here, what we'd expect then is for us to hold above this range and then see further expansion to the upside. So break out of this consolidation structure, a potential retest of the highs of this structure. We want to see that retest hold, and then we'd like to see continuation expansion to the upside. The alternate is that if we break down and fall back inside this structure and fail to reclaim it, then we may see a move to the bottom of the structure, right? So those are the simple ways to look at this from a price action perspective. And as I mentioned, now that we've had a very strong 3-day close, I think the likelihood of us breaking down below into this range and falling back to the lows is a little bit less likely than I did before. Now we'll talk about this from a wave perspective. And again, you guys know that this is something that I do pay a lot of attention to. We have an impulsive structure off of these lows. I do think that there's essentially, if the bullish argument is correct, then I think that there's no way really that we're going to go back below 19.6K. Again, it's not impossible, but I think the chances of this happening are less than 5%, if anything. Let's go ahead and take a look at what we have. So we have an impulsive move off of these lows. Again, this was the most significant logical buy zone that I marked off a while ago for a ride to 30K plus. We're almost at 30K. So very significant impulse. And then I do think that from this peak right here, which I think was the high of our local impulse, I think we've now started a corrective structure, okay? And this is an interesting corrective structure because most corrective structures tend to pull back, right? In this case, we had what I believe to be a expanded flat corrective structure. And interestingly enough, this kind of mimics our macro on Bitcoin and the all-time high. Imagine this being, let me zoom out a little bit. Imagine this level being 60K right up here. Imagine the next higher high being 69K. And then imagine this drop being our drop down here to 15K. And again, this is a perfect example of why I say that bullish market structure has not been broken on the macro, why nothing has been invalidated, and why I'm incredibly bullish for another fifth major wave. You can see here that we saw a break of this low, okay? We saw a break of that low. We did not hit invalidation, which is wave one territory, the $18,000 level, which is the same as this $14,000 level. Sorry, which is the same as this $14,000 level. Yeah, right here, sorry. Right here on the macro, we didn't hit that level, right? We bounced above it, and then we impulsed back to the upside to make new all-time highs. Imagine this being, right here, being a fractal of what we have here on the macro. So avoided invalidation at 14K, avoided entry of wave one territory right here, bounced above it, impulse to new all-time highs. Okay, exactly what we're seeing there, just on a much smaller version. So I just want to point that out because price is fractal. We see these fractals occur in all kinds of different time frames, and that was a perfect demonstration of a nice 5-wave move off the lows and why I don't think that our macro 5-wave move is done yet. So anyways, went off a little tangent there, but back to the wave structure here. What I'm looking at, guys, is I do believe that we've started a corrective structure off of this high. I know it's strange to see corrective structures that move to the upside, but in very bullish markets, it does occur. And it's a move here that typically these corrective structures are three-legged structures. So we have a 1 move, 2 move, 3 move, or a three-legged structure here. And this is essentially one corrective structure, a WXY. Then we have potentially another corrective structure, again, a three-legged move. And then finally, to finish this off, we'd look for another corrective structure. And then we'd look for the next major impulse or next major up move to the upside. So ideally, we get some consolidation here. I'm not saying that I think we're going to eventually rip through this level, but I'm not saying that we have to rip through it right now. Ideally, we get a little bit more consolidation here. Again, if you guys have been following me on Twitter, you know that I've been saying that the rate of ascent or the angle at which we move up here is only going to get steeper, right? We've seen that in all prior impulses. The move to the upside only gets steeper. I shared a video on that. I'm not going to go over it too much again, but the idea is that if we're going to get consolidation, the more consolidation or the consolidation that takes a longer period of time will occur at the lower ends of these impulsive structures, right? Once we start pushing to the upside and going into what is going to be, in my opinion, a parabolic blow off top, those consolidation times will get shorter as we start going pretty much vertical, right? So I would prefer that we get a little bit more consolidation here. I'll take all the consolidation that we can get at these lower levels because it means that the move up will be that much more fierce and that much more aggressive. So I'll happily take a little bit more consolidation here. And I will add that, as I've said before, Bitcoin will lead its way out of these corrections. Alts will lag behind initially and then play catch up later. Any sort of consolidations on the moves to the upside will be good for certain alts. Okay, not all the alts will be good for certain alts. I'll touch more on that at the end of this video. But guys, ideally we get a little bit more of a correction here before we continue to the upside. Again, I'm not saying 23 to 25K right now. I'm simply talking about a retest of the upper zone of this range. Ideally, something like this is what I'm looking for. That would be perfect, okay? And essentially what this would be a retest of the range highs and further consolidation. And again, when it comes to the corrective structure, we have a W, we have a three-legged X, and then we have a very choppy Y, and then we impulse. Okay, that's ideal. Alternatively, in terms of wave count, this could also have been our corrective structure, and now we're seeing a 1, 2, 1, 2, and then explode for the 3. Either way that you look at it, from a price action perspective, from an Elliott wave perspective, I think we look really healthy right now, and I'm eager to see how this plays out. So ideally, we hold above this range high. Thinking ideally some chop here for another couple of weeks. That would be preferable. Again, I'm not saying that it has to happen, but this would hopefully give some of our alts that are primed against Bitcoin pairings a chance to run. Because again, once Bitcoin starts making vertical moves like this, and until we break the old all-time high here at 70K, we can't expect alts to do much. Alts will lose value against Bitcoin because when Bitcoin goes parabolic, it drains money from everything else, and all the attention is focused on a pumping Bitcoin. So again, when we get these short breaks on this move up, it's these small windows of alt price action where we see some alts start to pop off, people start talking about them, but you can't get too distracted. It's very hard to time these little windows of opportunity for alts, and many people will get distracted by a few alts pumping, shift out of Bitcoin into these alts just to watch Bitcoin then resume its pump and run away without them. So you have to be very careful when trying to play these short windows of alt pumps that we may get on Bitcoin's rise to the upside here. Again, I think a retest of this cluster of demand here is certainly possible. Let me go ahead and highlight that there. So this is a little cluster of demand. Retest of this level, certainly possible, and I've depicted that with this little dip into this region here. But overall, ideally, we'd like to see these highs held and then another vertical pump on Bitcoin. If price does fall back inside this range and this cluster is lost, so if we test it, come up, and then fail to hold, and we start breaking down, that's totally fine. It doesn't invalidate anything. It just means that we're getting a little bit of a deeper pullback. And again, that's totally fine. The next area of interest, if we get something like that, is at about 25K. And I'll just show you real quick how I got that number. There's a lot of confluence, but probably the most logical way to look at it is this significant swing low that acted as resistance twice It's located at about 25.5K, okay? So there's a little bit of an inefficiency here. We have a very significant historical level on this swing low. So if we do pull back deeper, that's another logical level to see it bounce from. Again, doesn't really matter, it's no cause for concern. It's a logical level to retest if we get a deeper pullback. So that's where I'm looking at on the way down. Other than that, guys, not much else to update. I think that ideally we get, let me go take a look at RSI here in the lower time frames. Okay, so ideally, and this is how I'd like to see this play out, we want to see if we're going to get something like this, some sort of stalling of momentum here into resistance. Again, we're in this giant cluster of resistance. Ideally, something like this, put in a higher high on price here, give us a RSI divergence on the 4-hourly, and then give us a little bit of a dip back to retest this level, some consolidation, some chop, let some of our alts pump, and then continuation up on Bitcoin. Other than that, guys, that's it for today's update. I'm going to be making, actually, hold on, don't leave yet. I'm going to be showing you guys a couple of alts, specifically to talk about when I say some alts are going to pump. It's very important to understand which ones might and which ones are not going to have a chance. So I'm going to talk about that here in a second. But before I do that, I just want to say that I'm going to be posting more of these shorter term video updates on Bitcoin. When there is stuff to update, I'll be uploading them to YouTube. So if you're not following me and not subscribing to me on YouTube yet, please do so. I'm going to start transitioning from the Twitter videos to back to YouTube videos. So please like, share, and subscribe if you haven't done so already. And now let's take a quick look at what I mean by some alts are going to pump, right? So one alt that I've been talking about for a bit now, for a couple of months actually, that I really like is Origin Trail. We're just going to go to the chart here in a second. But when I say that certain alts are going to pump during consolidation phases like Bitcoin, I don't mean that every single alt is going to pump during these consolidation phases. And what's really important is you have to be able to identify those alts that may pump and those alts that simply don't stand a chance. And the best way to do that is to look at altcoin Bitcoin pairings. And I'll give you an example here on Origin Trail. Again, track, I've shared this chart online. I initially started talking about it on Twitter back here at 26 cents. It's been a few months now since then, and we're trading at about 37 cents right now. And this is pretty much the depiction of what I expect to happen in the coming weeks. But the reason that I like track, and this is the type of alt that you want to go for if you're looking to try and play these alt pumps, is if we go to the Bitcoin pairing, we can see that the Bitcoin pairing is at major high time frame support. And the reason this is important is because when we do get those windows of consolidation while Bitcoin's running to the upside, certain alts are in a better position to pump than others. And what I mean by that is that an alt that is at significant resistance, let's say we are over here, an alt that is at significant resistance against the Bitcoin pairing is not going to pump most likely during these periods of time. Most likely it's going to fall back down. Versus an alt that's at major high time frame support has a higher chance of pumping against Bitcoin when Bitcoin's steady, okay? When Bitcoin's steady and these alt Bitcoin pairings are at resistance, there's a good chance that we see rejections. When Bitcoin is steady in a bullish market and alt Bitcoin pairings are at support, there's a good chance that we see pushes back to the upside. And over here, we can see on this particular chart, a very significant level of resistance, historical resistance, put in our high here. This was our all-time high on the Bitcoin pairing, acted as support, broke down, acted as resistance, dumped all the way down here, has been consolidating in this range for about a year, finally broke out, retagged resistance, dropped back down to the origin of this major move to fill up this inefficiency. That inefficiency has now been filled, and if we are to make a move back to the highs, which is a logical area of resistance, that is from this level an 80% move to the upside against Bitcoin. Meaning that if Bitcoin stays steady, if Bitcoin stays stable, and the USD pairing starts pumping to the upside, we could see a very strong move against Bitcoin. This is the type of alt that I would consider, has potential to pump when Bitcoin pauses during these consolidation periods. There's other alts that don't look this good, that are not at high time frame support, and their likelihood of pumping during these times is not great. So you want to focus on alts that look like this, that are sitting on high time frame support, that have a higher chance, a higher likelihood of finding support at these regions against Bitcoin and pumping to the upside. That's it for this video update, guys. Again, I hope you guys enjoyed it, and please like, share, and comment if you did enjoy this video, and I'll keep them coming. All right, thanks, guys.